Did you know that renowned investor Cathie Wood thinks Tesla will increase in value tenfold? It's no secret, though, that Cathie Wood is a big fan of Tesla and has high hopes for the EV business. You won't want to miss this one, though, since it is interesting to hear what she thinks of Tesla's current and future prospects. Renowned investor Cathie Wood acquired 172,000 Tesla shares at the beginning of October. ARK Innovation, Wood's flagship fund, purchased a tranche following Tesla's announcement of a delivery miss. Following a press release from Tesla in early October regarding its delivery and production figures, Wood's firm made its second purchase of 66,190 shares in Elon Musk's company in late October. This transaction was made in October 2022 alone. Wood's most recent purchase was made after Tesla's Q3 announcement caused the stock to decline. This demonstrates Cathie Wood's optimistic view on Tesla on its own. Wood predicts that Tesla will increase tenfold in light of this. Wood sent an update to investors via email, stating that by halving the price of an electric vehicle, Tesla could increase its addressable market by 10 times. This is hardly the first point that Wood brought up. Experts have expressed concerns about what cheaper EV models would imply for Tesla's future as the company's EV sales have surged. Concerns about declining demand led Tesla to lower its EV costs in China on the same day that Wood announced her tenfold prediction. The Model 3 sedan and Model Y SUVs saw price reductions of 5% and 9%, respectively, from the firm. The desire for Tesla's vehicles may be waning even in China, the largest EV market in the world, due to growing competition from local automakers like NIO. The markets don't appear to be responding too negatively to the announcement of the price decrease, though, since Tesla's stock is gaining today. This lends credence to the theory that Tesla would benefit most from providing cars at lower prices. During the most recent Tesla Q3 earnings call, Elon Musk mentioned that the company is working on an electric car that will cost around half as much as the Model 3 and Model Y. There's no disputing that Tesla is one of the most well-known brands in the worldwide EV markets, but its cars are pricey. It's no secret that Tesla's third quarter financial report fell short of Wall Street's expectations. That strongly suggests that when consumers experience financial strain, the market for pricey EVs may be declining. Many Model 3 and Model Y automobiles retail for approximately $60,000, according to Barron's, an American weekly magazine newspaper published by Dow Jones Company. EVs currently make up only about 5% of all car sales in the United States. Approximately half of the cars sold in the United States are those that cost $30,000 or less. The ARK Invest conducted by Cathie Wood revealed that just 5% of the U.S. automobile market is comprised of cars priced over $60,000. As a car's price falls below $30,000, that market grows to over 50% at the same time. Therefore, Tesla's addressable market would grow dramatically if it were to introduce a less expensive choice in comparison to the Model 3 and Model Y. In our opinion, worries about dwindling demand for Tesla vehicles are unfounded, said ARK Invest. If anything, demand for Tesla vehicles could increase tenfold with a $30,000 vehicle because supply is already limited at present price points. If the Cyber Robotaxi is Tesla's next-generation vehicle, we wouldn't be shocked. In a market where concerns about demand are growing, businesses who offer more reasonably priced goods stand to gain the most. Automakers like General Motors, Ford, and Toyota produce EVs that are far less expensive than Tesla, but when it comes to electric cars, none of these businesses have the cachet that Tesla does. Wood is therefore right when he predicts that once Tesla perfects a less expensive model, it will see a far wider addressable market. And it may be the best moment ever for a reasonably priced Tesla vehicle. Investor relations comes last for Tesla, according to Business Insider. Martin Vita revealed at a Goldman Sachs conference that Tesla intends to release a more cost-effective model in the future. It might not be its top concern at this time, though. Insider Inc.'s first publication, Business Insider, specialized on business and financial news. The research stated that Vita recognized the necessity of having a diverse portfolio in order for the business to become a high-volume automaker. Before revealing its company-run robotaxi, Tesla must have a more reasonably priced model. Given the higher-than-anticipated demand for its Model 3 and Y vehicles, the senior executive, according to him, does not see the need for a new model anytime soon. Model Y will basically next year become the best-selling vehicle of any kind of all time in the world, Vita allegedly stated. This is even with the high Fremont factory costs, which include virtually no leasing. According to him, the Model 3 rear-wheel drive is the least expensive Tesla car, costing $40,390 before any possible rebates and petrol savings. There have long been rumors of a $25,000 additional car in the works, but neither Tesla nor its CEO, Elon Musk, have provided specifics. Some, on the other hand, think that Tesla will never, if ever, produce an affordable EV. This is due to a number of factors. First off, it would seem foolish to undermine Tesla's current profit per sale by using the lowest cost model and lower margins. The company already makes so much money from these sales. Second, considering the global shortage of chips, it is emphasizing the Models 3 and Y, which are already very well liked and lucrative. However, Musk's logic is based on a more fundamental idea that affects both the ownership of cars and the shift to electric vehicles in the long run. Furthermore, it clarifies Tesla's enormous valuation because the company is primarily a software and service provider rather to merely an electric vehicle manufacturer. Musk rejected the notion that Tesla had time to concentrate on a $25,000 EV during the 2021 Q4 earnings call, saying, "We have enough on our plate right now, too much on our plates, frankly." A completely autonomous automobile will be used 5 times more than a typical privately owned passenger car, according to Musk's explanation. Later in the call. This means that a single vehicle has the potential to generate a huge amount of income. According to Musk, fully autonomous vehicles could currently result in the largest increase in asset value of any product ever seen. Compared to a car with a driver, a car with FSD can be utilized far more frequently and for less money. This is why he said that taking a robotaxi would be less expensive than buying a bus pass. It will also have other significant impacts, including parking lots, because cars won't be sitting idle all day, so many parking lots won't be needed. However, because there will be so many more cars on the road, an increase in traffic could pose a serious issue. There will be an absurd quantity of vehicles. I think taking a robotaxi and autonomous Tesla that costs less than the subsidized price of bus tickets will be a really affordable way to get around, Musk remarked. In its Big Ideas 2021 report, even Cathie Wood's company, ARK Invest, estimated that Elon Musk's fleet of robotaxis may produce operating profits of over $1 trillion annually by 2030. The creation of the robotaxi fleet, along with its FSD software and autopilot, is the cornerstone of Tesla's autonomous approach. The EV manufacturer unveiled its complete self-driving beta that will be allowed to drive on inner-city streets in late 2020. The FSD beta testers have been quite outspoken about their impressions of the program, frequently stating that they see noticeable changes quickly. There is some support for Tesla to introduce its driver-only ride-hailing service, despite the company's amazing progress with the FSD beta. Although there is significant disagreement inside Tesla regarding the deployment of a human-driven ride-hailing network, Wood stated, "We believe that would be a very good bridge to their autonomous strategy, and we think they will decide to do that." Summarizing some of ARK's general opinions on the matter. It appears that some Tesla owners share ARK Invest's concerns over the robotaxi fleet. Nevertheless, even with the FSD, Cathie Wood and the ARK Invest group think that if Elon Musk's electric vehicle manufacturer were to create a product that could be sold for half as much as its present offers, it could potentially tenfold increase its total addressable market. Experts from other fields have also weighed in on the potential impact of lower-cost electric vehicle models on Tesla's future. For investors, Tesla's 10x growth is nothing but positive news. More people will benefit greatly from Tesla's low-cost electric vehicle manufacturing if and when it does so. Imagine being able to purchase an EV at a reasonable cost. If you subscribe to this channel, our community will expand tenfold.